Hello traders, welcome to another daily analysis. Today is November 1st, Tuesday. So welcome into the November, and time goes really fast. Just think about it, 2016 is almost finished. Last night didn't trade, was Monday and it was Halloween, so went out for a little bit of celebration, a little bit of fun. But got back on time just to check, in time for the interest rate decision coming out from the Reserve Bank of Australia and Bank of Japan. Now, the probability of the interest rate on hold was very high, and that was actually the result. So that's why I was not surprised. But I was still there just to make sure there's no surprise, because if there is a surprise cut, then that will be a good chance for us to take advantage of it. So interest rate came out as usual on Monday, but because market has a little bit in this anticipation for the RBA to cut rate, although it's very low probability as the future market indicated, but a lot of traders still like to bet on that regardless of the low probability. And of course, the result came out as expected, so we did see a reverse reaction into Australian dollar. It means a lot of buying power got into Australian dollar. Now, just to give you a clear picture right now, the general market is very negative right now. And the reason is because the US election. As you follow the news, you know that last week there was a sort of turmoil from FBI saying that they had a warrant to further investigate email from Hillary Clinton. Now, in one sentence is that Hillary Clinton had the victories on her hand already, last week. Now things like the US election finally gonna come to the end. The world finally gonna be stable again. However, this incident now completely changed her perspective. And now people think she might not win. And according to the poll, now Donald Trump actually caught up to her. Still behind, but now the gap become very narrow. So now what this says that now once again the war become uncertain. Now we don't know whether Donald Trump or Hillary Clinton who is gonna win, and now it causes a lot of uncertainty, which causes a lot of negative sentiment because people don't like to see uncertainty. People want financial stability, and sometimes when things happen politically, the sentiment died down very fast. That means things get back to normal. But because this is from American, which is US, whether you like it or not, it's still the superpower of the world. So now this causes a huge, negative sentiment. As you see, the equity market were all red, and the gold price hit 1 month high. And the oil market also went down. So this negative sentiment is very strong, and because of that, now we are not expected to see. This is pretty much the sentiment is going to be a big play. So although Australian dollar did have a good sentiment, but it's died down very fast. Now, other than that, we also have a good data coming out from China on Monday, which also help Australian because China is their biggest trading partner. So if China is doing well, it's going to be very good news for Australia. But all these things is not going to be as strong as the negative sentiment from US. So just to give you an overall picture of what's happening in the world right now. So today, then the GBP manufacturing PMI from British pound was slightly below expectation, but not a negative deviation. So nothing really, too surprise. The GDP data from Canada was also in line with expectation. And finally, ISM manufacturer PMI from US was slightly better than expected. But again, these are all being disregarded at this moment because the sentiment from US election. Now, GDP index from New Zealand was very positive, and just a couple hours ago we have the employment data, which was also very positive. So it definitely gives New Zealand dollar a good boost, but just remember that they are going to have the interest rate decision coming out very soon, and they are expecting to cut. And not only that, they are expecting to further ease even after this cut. So it's quite negative ahead of New Zealand dollar because of the interest rate. And on top of that, the sentiment right now is very negative. So that might hedge out that suppose, because if you want to trade GDP data from New Zealand, you should just day trade at this point, because the long-term fundamental is not that positive for New Zealand, and right now the sentiment is also not that positive. So you don't want to go against the big momentum in the market right now. Coming down to oil market, WTI had a huge drop on Monday due to the OPEC meeting. Once again, they failed to reach an agreement. Now, no surprise, as Kip mentioned, that's what happened in OPEC. They're pretty much doing what they're supposed to do, which is, fail to reach agreement. And today, the API report, American Petroleum Institute report, had a build-up, which again, it's bad for the oil market because now you have more supply. And on top of that, it's just a very negative sentiment. Now, however, I will say that the US dollar drop, the US dollar negativity might give an oil market a little bit boost. As you all know, that oil is denominated on US dollar. So once the US dollar is low, then you have a higher oil price as a correlation. So this might help a little bit, but just understand fundamentally the reason it dropped because of the OPEC meeting and the large build-up. So that's a more fundamental economic reason, and that will take a more strong momentum, a more strong confirmation if you analyze the market in that way. Now, equity market is again all red. It's still turmoil from US reduction, and that's pretty much it. Another news is that the Bank of England, Carney, saying that he is going to continue to be a chairman for Bank of England until 29. I don't know if it's called chairman or what's the correct title. But anyway, he's going to be the head for the Bank of England until 2019. Now, this could be a good news or bad news, but generally the market has perceived it to be a good positive sentiment, because right now the last thing that England want is another uncertainty. So now they don't want to, they just changed the prime minister a couple months ago. They changed everything a couple months ago. They left Eurozone. The last thing they want is to have a new guy coming out from nowhere. So of course, people want to see a familiar face, and Carney was not doing a bad job, all this time. So he says he's gonna stay, and that's generally as a good positive sentiment for the market, for British pound. And then lastly is the Bank of Canada, Polas, state that the committee seriously, I actually just copied what he says, consider the possibility of raising inflation forecast on capital measure. But basically, okay, let me explain. Basically, what he's saying is that the inflation target is 2% right now. Now, if they reach the target to 3%, now that gives them more room. Because now if it's too, like just for example, if you say you want to lose weight, you say I'm gonna cut 5 kilograms, or you say I'm gonna cut 10 kilograms. Which one you have to work harder? Well, 10 kilo, of course, because you have more a bigger target to reach. So what method would you use if you have to cut 5 kilo versus 10 kilo? Well, you have to use a more drastic method if you have to cut 10 kilo, right? Because now you have to cut more. You maybe have to diet more, you have to cut down more calories. So same thing, if you say your inflation target is 2%, then you have certain measure. You can, cut down your interest rate to a certain point. You can, have the quantitative easing. But now if you say, hey, I need to have a higher inflation target, then what it's gonna do is that you have to cut down interest rate further, you have to quantitative easing further, you have to do more drastic measure. And that's what Canada wants to do, is because they don't think the inflation, or they don't think the economy is picking up well enough. But the target is going to be reached in 2018. So they want to maybe, increase the target, so that gives them more room to cut down interest rate further, or to have more, easing policies. Now they say they seriously consider that, but they didn't do it. So right now it means that they are still choose to basically wait and see. So they are not thinking to do anything drastically right now, which is actually a positive sentiment for Bank of Canada and also for Canadian dollar. So the only thing we need is, again, oil market to pick up, and because these two are just so correlated. So right now, just understand there's a neutral fundamental picture for Bank of Canada, also for Canadian currency, Canadian dollar, is because they were thinking to cut rate further by increasing their target of inflation. But now they are not doing that. So now they are wait and see. Okay, so that's pretty much the fundamental and sentiment analysis for Tuesday and yesterday. Let's take a look at the data coming out from for this week. Just give me 1 second. So, as mentioned, you already have interest rate from Japan and Australia. Press conference from Japan was nothing in particular, nothing new. And today, later on, you have building approval from Australia, which is not a big, tradable data. Inflation expectation is important for New Zealand, but again, it's either gonna give them more negativity, or it's not gonna give them too much positivity. It's because in the last RBNZ statement already said that they are going to cut rate no matter what, right? So they basically, the central bank saying that they are going to cut the rate. Doesn't matter what the inflation data says, I'm going to cut the rate. So that's not gonna provide too much long-term positivity. Of course, in this kind of data, you can trade short-term if you are an Asian station trader. For me personally, I don't trade anything other than London and New York station, so I'm going to skip that. And if you ask me why, it's very simple. It's just I set out my own schedule, and then I'm trying to follow a habit of that, and that's why I don't want to change my habit just for this 1 and 2 times, because once you break your habit, you actually break a routine. And other than that, also the Asian market generally in terms of foreign exchange market, it's just not that have that much momentum in liquidity. So you're not gonna get too much pips that you can make during this intraday movement. So for me, I just like to place my time and value in a better probability trade, which is in London and New York station. Wednesday, tomorrow, you have a lot of manufactured PMI from Europe. Now, all this individually is not a tradable data, but in overall, after this time, you can pretty much tell whether what happened to euro dollar. But right now, in terms of sentiment, because if it's negative right now, so it's actually a positive for euro dollar, as they are the safe haven currency. They have become the safe haven currency. Construction PMI, again, not that important for British pound, because the biggest sector is a service. So service PMI will be something that is tradable. Construction PMI is not. However, I will still be here. No, actually now I won't be here, but if I'm going to be traded this, again, if you have a deviation, you can definitely trade it. And let me give you a number, right? Since people have different schedules, so you might want to trade that. If you do, let me give you the expectation for maximum and minimum number. So November 2nd at 5:30, construction PMI, we are expected to see 51.8 on my routers. So it says 51.9. Okay. So the maximum number is 53.6. 53.6. So if you see anything above 53.6, excuse me, that's a good buying indicator to buy British pound. A negative minimum number is 49.5. So if you see anything that's below 49.5, that is a negative deviation, and you can short British pound. Now, normally, of course, you want to short British pound, you can go with US dollar. But because of the sentiment right now, I will ask you if you want to short, if it come out as negative deviation, you can short British pound against Australian dollar. So short pound Aussie will be your good probability to trade a negative deviation for construction PMI from British pound. A positive deviation, you can buy British pound at this moment, because relatively speaking, they are actually not in the headline right now. So you can buy them, but again, it's just going to be an intraday trade for me personally. Now, I will buy them against, it's either US dollar or, actually, I don't know. It depends on what happened to the session. If we still continue to have a negative session because of the US election, then yeah, you can buy cable when it's positive deviation. However, if the session turn, if the sentiment turn, then you can buy against Japanese yen or Swiss franc. But I will actually go with Japanese yen, because Swiss franc seems to be largely sold off this past few days already. So I will buy against Japanese yen. So long pound yen long pound yen if we have a positive deviation, short pound Aussie if we have a negative deviation. And if you want to long, if with positive deviation and the sentiment is negative, then you can long pound dollar, long cable. And then of course you have non-farm employment change. This is tradable as well because this is more like a first, employment change ahead of non-farm payroll. So again, let me read a deviation to you. 815. We expect 165K. The maximum number is 190,000 and the negative number is 130,000. So again, it really depends on the sentiment at the moment. But again, if we don't take consideration of the sentiment, and of course, if you have a positive number from US dollar, you can short cable. If you have a negative coming out from US, and if the sentiment is also negative, then yes, you can buy Aussie dollar. And crude oil inventory is going to be if you want to do it, I wouldn't suggest you trade it because you have to see exactly the detail. It's not only the crude oil inventory, it's the distillery, it's also the gasoline inventory. So you want to have everything in consideration. So it's not events that you just trade the number blindly, but just knowing that the oil market is in a negative sentiment because OPEC meeting. The American Petroleum Institute had a build up. So you also already have two negative numbers from oil market. So of course, you have a higher probability to short Canadian dollar if the crude oil inventory is another build up. That would be my only advice for you. Now, of course, at 2 p.m., you have a FOMC meeting and Federal Fund Reserve rate. Now, the rate is expected to be on hold as usual, but the FOMC statement will again cause some turmoil along with the election and the sentiment. So it's going to be a very exciting moment. Again, I don't know if I'm going to trade it because this kind of statement is hard to trade, hard to interpret it. You can trade it if you like to, but for me, generally, I stayed out after 11 a.m. Eastern Standard Time, unless I know that the Federal Reserve Fund rate might change. But I might still be there just to wait for any surprise. And other than that, you have a trade balance at Asian station from Australia, which is not that important. And then let's keep going. Thursday, you have service PMI. Now, this is important. This is definitely tradable for Thursday for British pound. And then you have another rate decision coming out. This is also tradable, which is also expected to be on hold, but now we don't know what's going to happen. So take a look at that. And then the unemployment claim is not important. IMF non-manufacturing is not important. And then RBA monetary policy statement. You can take a look at that. But the retail sale, and again, another speaking from Bank of Canada. And finally, Friday, this non-farm payroll will be the highlight of the week. Definitely tradable. I will read our number to you on Thursday, but definitely take a look at this one. Same as unemployment rate, unemployment change. Now, we will analyze more when we go further into the week, just because we have to see, for example, if you want to trade Canadian dollar, you have to see what happened to the oil market. If you want to trade US dollar, generally it was a very straightforward fundamental trade, but now because the sentiment from election, and next week is the election, so now things are really unstable. We don't really have a clear direction, so that's why we have to do analysis day by day at this moment. And again, at this moment, I will strongly suggest just to do intraday trade because you don't know what's gonna happen, especially if you want to do US dollar, if you want to do Japanese yen, things like that. Okay, now let's take a look at our chart and see what do we have today. So last Friday, I forgot to make this video, but last Friday I am out of my Euro Aussie trade because I get, you can see, I get stop out at this moment. So it was a profitable trade. It was very nice. The only thing I could have made difference, it's probably, move my line here. But again, I sacrificed few pips just to give it more room to breathe. And another way is I could have get out at this in reversal signal, but at that time I don't have any fundamental or sentimental reason to get out. And for me, that's already fundamental and sentimental reason always have more value than technical analysis. And the reason is because price action changes day by day. The more weighted data is always the fundamental of the countries and the sentimental of the market. So I could have get out here, but then again, you never know, because it's really depend on your human emotion, right? If you take up this signal and you say, wow, this is a good signal for reversal, I'm gonna trade it from now on. It's not really the case, because you can point out so many other signals that did not work out, like this one. It doesn't work out, right? And then you can point out a lot of other signal that's supposed to work out, but didn't. And in this kind of case, it's just the way it is. You never know. The price action, again, the candlesticks, it just reflect what happened in the market. It's not a holy grail. It's not a future. If you want to know the future fundamental or policy, it's actually more in line with the future, because the policy maker makes policy that's for the future. For example, I say the Bank of Canada saying that they have to target, everything they say is very in the future tense. You have to understand why can't they just ease in further? Because everything has to go with the future plan. So they have to first raise the target of the inflation, then they can have a further quantitative easing. So it goes in that kind of logic. It's not like price action. It's not like technical analysis. It goes by day, because people can change the position just like that instantly. EuroCAD was my short trade last Friday. Now it did not get filled, so I just cancel it. Didn't get hurt, and that's something I wanna maybe enlighten you, is that I always, ever since a couple years ago, I learned from my mentor, I always use stop order. Now the reason, a lot of people don't like to use stop order. I got it in this one, right? So I use stop order for here. That means the only way I get filled is if the market prove me that I'm right. This is a down signal, a bearish signal, and fill me out. Now, when I start trading many years ago, I didn't like it, because I feel like, I'm losing pips, right? If this is a reversal signal, I should have just get in here, or even here at a reversal. But I tell you what, it's just an illusion, because if you get in here, or if you get in here, it's a different entry. But I keep saying that the money is made at the exit. The money is made on the trade you didn't enter. So every coin has two sides. If you put here, yes, you lose the potential profit, maybe if you put here or even here. However, you also avoid a loser. So that's why ever since I adopt this kind of mentality, it just works favorable for me. Because I don't need to be scared whether the market is gonna go to my way. I let the momentum of the price action decide for me. And if I don't get filled, as a rule of thumb, I always cancel my order, because it already shows that no matter what the fundamental and sentimental is, the market is just not going to participate in. And again, as I say, if you want to trade, it's best for you to always have a 3 analysis in 9. So like this one gets filled, and say why? Well, it doesn't matter. It just shows you there's a strong momentum. So things like that is a very good trick or method you can take into your consideration. Now, of course, it doesn't work all the time like this one. If you put in here, you might get filled, you get stop out. And same as this one, you get filled, you get stop out. So it's just a small major. It doesn't work every all the time, but it works a lot of time to help me to avoid a loser. Because honestly, back then, of course, now you know the negative sentiment has helped the euro dollar. The OPEC meeting failure has caused the Canadian dollar to drop. But back then, we didn't know that. So this is where really this kind of mentality can help you a lot in your trading career. So let's take a look at our 28 currencies. So first, the euro dollar. Let's go euro pound. So again, very neutral stance, and the reason is because euro dollar has a good sentiment due to the safe haven currency status, but British pound also had a neutral stance. As mentioned, we did not have a negative news. Now, This drop, why? Is because the Swiss franc had a huge buying power due to the uncertainty of the market right now. So that's why you see a huge buying power into the Swiss franc. And no surprise, that's where the safe haven currency is. Euro dollar is a completely update against the fundamental because of the election. And that's just to show you how strong that election sentiment is. Now, am I going to long here or here? Not really. And the reason is because you don't have any control of the process of the election, or whether FBI is going to come out and say, hey guys, nothing happened to Hillary Clinton and now she's fine. You don't know that. We don't know that. There's no insider news for us. So if you trade this kind of trade, you really play a gambling game, because you are going against the fundamental of dollar purely based on the sentiment of the news. But the thing is, you don't know whether this election is going to have another good news coming out tomorrow. So by doing that, you are really just, 50-50 chance. And for me, gambling is 50-50 chance. For me, something slightly better than 50-50, then it's a game of probability. Something at 50-50 or lower, it's just a gamble, right? 50-50 is gamble. Something lower than 50, then you're being the fool. So that's why I always feel that people go to casino, you're being a fool. Especially if you play in a game that you don't even have a 50-50 chance, that you really are being a fool, okay? So keep going, Euro Aussie. Again, we have another, just look at this candle, interesting. If you go into a day trade, hourly trade, you'll probably see a down trade for euro, for Australian dollar, because Australian dollar was very strong due to the interest rate uncut, the positive RBS statement, the positive Chinese data, but it changed the direction because of the sentiment. And that just show you that regardless of how strong the commodity pair is, it does not provide you enough strength to battle with the negative sentiment from the US election, because negative sentiment does not come out as equal, right? Sometimes you have a negative sentiment that die down very fast, but at this case, now we can really tell you that the US election, the sentiment is really strong in the negative side. Okay, let's keep going. EuroCAD. Again, another, it's all like strong momentum into the euro dollar. How very interesting is that you see the first downtrend red candle from New Zealand dollar, and that just shows that regardless of that, the GDT price or the New Zealand dollar is still very strong today, regardless of other things. And euro yen is probably neutral, as saying. Now, cable Swiss is gonna be a large down day. Okay, it's not as large as euro. Interesting, and I think it's because Swiss franc is largely positive. But again, people don't know if they want to short cable. Well, sorry, want to short British pound at this moment. Now, is this the signal I will get into for short? No. I can tell you very simply, I don't have enough sentimental fundamental reason to short British pound. Also, I don't have enough faith to buy Swiss franc due to the government interventions. And I know they already come out again today saying that the currency is overvalued. So it's the same thing over and over again, but they are fully prepared to intervene, and I do not want to catch the falling knife. Cable, again, a neutral stance today. The reason is because you have a negative sentiment in US dollar. You also have a fundamental negativity in British pound. So that's why it's hedge out each other, so you don't have much movement. Pound Aussie, again, really just a very, very neutral position in British pound at this moment. Now let's keep going. Swiss franc, Japanese yen. Swiss franc, again, of course, taking a better sentiment. And the reason is because Japan has an interest rate decision and conference coming out. So it provides more uncertainty. That's why when a trader wants to find a safe haven place, they have basically three choices. They have a Japanese yen, they have Swiss franc, they also have US dollar. Now, Japanese yen does not have the interest rate decision and press conference coming out, so that's an uncertainty for traders. They'll say they're not going to buy it. US dollar have a negative sentiment from the election right now, so they are also not going to buy it. Now that leaves them with Swiss franc only, and that's why you see the market hugely got into Swiss franc at this moment. Let's take a look at dollar Swiss. Okay, huge drop for US dollar versus Swiss franc, and I'm not surprised to see another intervention coming in, but just understand that this might provide us a very good buying opportunity once all things are equal. So I'm gonna wait to see what happened to non-farm payroll, or even leads to the next week's election. But just understand that the further we drop down right now, it might providing us a good buying opportunity in the weeks to come. And keep going at the dollar CAD. Again, sort of a neutral position is because Canadian dollar is negative, but so does US dollar. So you hedge out each other. Same as dollar yen. Aussie Swiss. Again, you see, even the strong Australian dollar is not capable to battle with Swiss franc, and that just shows you how paranoid the market is at this moment. There is only one reason people will buy Swiss franc. That's because they are scared and shitting their pants. And the reason is because Swiss franc is a negative currency rate. That means that you have to pay interest when you hold in Swiss franc. You are not making any money holding Swiss franc. So anybody buying this currency only for one reason is because shit's gonna happen. Let's buy something safe. And normally, again, they have other choice, but now they don't. So all this just tell you how paranoid the market is, how scared people are at this moment. Okay, Aussie yen, another good reversal signal for Japanese yen due to the negative sentiment. CAD Swiss, again, anything versus Swiss franc is a losing battle. Okay, the only thing, okay, that means New Zealand dollar is actually quite strong due to their GDP price index and employment data. So they are actually taking a pretty good lead right now for New Zealand dollar. Unfortunately, we don't have any good price entry point at this moment. I mean, let's take the New Zealand dollar or even New Zealand CAD. Yeah, I don't really have a good entry point. I mean, if you're a breakout trader, yeah, definitely this might be good for you. But the resistance is just so close, just right here, right? So I don't know if I were you, I want to enter it. I'm probably not going to enter it. And New Zealand yen providing nothing really happened. Now, some people ask me, what is this? Am I trading with tech indicators? No, actually, let me explain to you. This is the average true range. So the reason I'm using it is just to give you an estimate of the daily range. Now the reason is because this is where I put my stop loss. So unlike most traders who use candlestick high and low or maybe swing high, I actually use a more mathematical sense. I look at this average true range, average daily range, and then that's where I put my stop loss maybe 1.5 or 2 by average true range. And I learned that by turtles trading. So if I'm gonna long here today at 74.98, the worst, I shouldn't say worst because I was like that. You can put your stop loss here, but you're very easy to get stop out. You can say, okay, let me put below here as the nearest swing high. You can do that too, but also this is a very strong point for every other trader. So a lot of people are putting their stop loss here also. So for me personally, I don't like to do that. I like to use math. So if I'm getting, as I say, 75, I like to use average true range by 2. So I bet 75 pips by 2 is 150 pips minus 75 is 73.50. So I will put my